look out my window.
Hello traders, Gary Wagner here. It is approximately 12:30 in Honolulu, Hawaii. The markets have closed for the week. It is Friday, the 5th day of August, and this is the Daily Report for Gold, our weekend review. This will be an extended report as there is a lot to cover, so I'm going to try to cover it quickly. What a week we had. High after high, new record high after new record high. Yesterday, what we witnessed in the market, the liquidation that we saw, which was, of course, a spillover from what happened to the stock market as that went lower. It has been a market that has been filled with incredible excitement. First thing I want to do is let's kind of put this into perspective. So we've got, in essence, a marketplace. It did close higher today, up about $14. You can see that it has taken over. This is engulfing bullish, by the way, in terms of the pattern, but yesterday was engulfing bearish. But as you can see, when we take a look, we saw a market move from about 1610 to 1663. So we saw about a $50 move in gold, a phenomenal move in the market. Of course, the majority of it made in this one day, this single candle, this long candle. This was Tuesday's trading activity. When we convert this particular chart into our average chart or Henkin chart, and I've gone ahead and done that, let's blow that up a little bit. You can see that since we have been at 1380, if we simply look at our daily chart in Japanese average format, it has been solid green all the way. Now, as you can see, during most rallies, here's our April rally. During most rallies, you will get at least a couple of points in which the consolidation is strong enough to actually turn the candle red, although the trend stays intact. You will also get, when the markets come down, you will get these green candles, in other words, little upticks. But very rarely, and this is right after the January correction, and that was a very, very strong correction. You can see back in February, we got straight green all the way up. Other than that, this is the only other moment this year in which we have had a rally that has just been, in terms of its Henkin candle, straight green. The second thing that I want to really point out to you is that this rally, in terms of a time parameter, is now exceeding the rally that we saw right after what I label the January correction. You can see it went from the end of January but ended in the beginning of March. This started beginning of July and is still going strong. So we'll have to see how it pans out next week. But as you can see, we have witnessed not only an incredibly strong week, but an incredibly strong rally here that's now extended to a month and a week. The next chart I want to look at is going to be our weekly chart, and then I'm going to want to talk to you about my longer term forecasts. And as you can see up here in the upper left, we've added quite a few numbers on our extensions because my initial goal, that 76% extension or 1680, that has been hit. So we want to look what's above it as well as below it. But let's start with the weekly chart, because that to me is really indicative of what this market is doing, really more than anything else. When we saw this market trade and we looked at it on a daily chart, of course, it actually hit the top of this channel line and then it pulled back. In fact, in my Kitco article yesterday, I wrote that the night before the market had sold off. But what I had written was that every time it tends to come up here, we do get a pullback. Now, realize that when we draw these channel lines, if it goes beyond that, the channel line can be raised. So this channel line, I'm actually fixing from these two lower points here and this lower point here. What this is indicative of, this particular move right here, is if it holds and maintains, we have an absolute breakout to the upside out of the channel lines. In other words, out of the trading range that it has been going at. There is nothing unusual about seeing a market which goes from a lower channel line to an upper channel line and trades in such a way that it moves up the channel line, and realize that up this channel line has been a move from, because it is a weekly, this is at the beginning of '08, we're looking at a channel line that started really in 2008. So this is an incredibly long channel line in terms of the weekly, and now what you can see is we're now at this point, and we haven't had an utter breakout above that particular channel line. If we get another week in which the market doesn't retrace and move back into this channel, that's an absolute utter breakout and extremely, extremely bullish towards the precious yellow metal. Incredible.
Many sights to see.
So the next chart I want to look at, this is a shorter term. It is a 360-minute chart. It is in straightforward candlestick format. And this chart has been the one in which we have been using for our Elliott wave count, as you can see. What I see in this particular chart here, of course, we hit a new record top. That's up here. There's no doubt that we are in our impulse wave 3 here. This is an impulse wave 3 of a larger 5 count, and there's still a major above that. But what we can see from this is that if we do just straightforward Elliott wave tenets and use that as an indication of where wave 3 might go, there is a statement which simply says that wave 3 cannot be the longest, or excuse me, wave 3 cannot be the shortest of any of the impulse waves. Therefore, if we have correctly identified this as wave 1 and wave 3 began, which we see at 1580, you will see that by having this market simply trade to a equal move, when we compare it to wave 1, we get a target now of the conclusion of this wave 3 at about 1710. So mark that down, 1710. It's an important number, but now let's see how that matches with Fibonacci harmonics and Fibonacci extension. So I'm going to pull up this chart to do that kind of work for us. Traders who are my daily subscribers, you know we look at this chart every day. For my weekend review watchers, this chart is simply our target board. It's where we're looking for the market to go. And as you can see, the big target that I have had has been 1680. We've been talking about that for a while, and we actually hit that point. By hitting that point, we did come off it. When we look at our daily Henkin, they're still green, as you know. And we've got a couple of new areas that I have put in. And the areas that I put in terms of the extensions is I have added to the extensions of what we call our Fibonacci extension 1. Fibonacci extension 1 is simply an extension of the actual move in wave 1. So that when we take a look at that, and it's the first of the waves, when we take a look at that, what we get is 161 and 176 run between 1700 and 1720. 100% extension. And this is an extension of the large move that we saw on the preceding rally, meaning the rally that had a full 5 wave count. A equal move, in other words, if that wave and this wave are going to be the same size in terms of price move, that would put a target at 1744. Now, my belief is right now that there is an opportunity. If this market continues higher, I believe that it will probably come up and test between 1700 and 1710 before correcting, going into our final, call it an impulse. And in that way, we would have something like this. The market comes up to here. It comes back down. It retraces to some logical point, whatever that point is. And then at that point, we have one final rally. And that of this particular impulse stage. And that rally would take us to 1744. One logical play that we could see actualize itself within the market. Traders, we had a great trade this week. We got out of our long trade, obviously. I moved my stop up. That stop got hit. It got hit $20 from the market here. We got in at 15.47. We got out at 16.45, a $98 profit. Focus on that, not on the fact that we left, call it what, $15, $17 on the table. That to me, I would always rather leave 17 on the table than give up 17 of hard-earned profit. So I've no issues with that. But the way that this market is trading, we will look to reposition ourselves on the long side at the beginning of the week. You'll get a special email notification letting you know when to go in and where to place your stops. This has been Gary Wagner, as always, wishing you good trading. We certainly saw that this week again. Bye-bye. We'll talk to you on Monday.